All right, so we're in the thick of earnings season, and my next guest says the message right now, forget about beats and misses and all that stuff, overall, for the economy, is that it's simply not as robust as we seem to think it is. I want to bring in Nicholas Wealth Management President David Nicholas. And, David, coming into the week, we were at just again, this is FactSet, so remember there's all kinds of different earnings estimates out there. FactSet, 3.6%, but the street thought we were going to be at 4.3% blended growth. So that in of itself, you're saying, hey, you know what? And we always know these numbers are kind of relatively low to begin with. Yeah. That gives you a sort of a sense of what's happening with the overall economy, too.
Yeah, Charles, it does. Really, this doesn't tell you the whole story, because if you look at this, the second lowest earnings growth since last year, second quarter of 2023. So it's not a full picture. If you remove the 493, the Mag 7, and you leave it up just to 493, we're seeing flat earnings growth. Right. So it's great that the generals, like you say, are driving growth here. We're not seeing it right now. Now, forward estimates look pretty good.
Well, their assumptions are huge. I mean, Wall Street's looking for a monster inflection point here. Right. And again, to be led by what you're saying. So here we have information tech. The blue line is what what we have versus the estimate. So between infotech and communication services, yes, but these other areas like healthcare have been an unmitigated disaster. Of course, you look at energy. So how do you think the street has got it right, the sense that we're going to all of a sudden have this big bounce, and that big bounce is going to carry the market from here?
That's a good point, Charles. Like, what's going to cause it? Does that look like a healthy economy? No. We see this is probably more AI spend that's driving growth this year. Look, the elections matter. And I think policy is going to be a big deal, so I think there's a lot riding on this. But this week is important. We want to see the broadening out. I just don't think we're going to see it just yet.
So let's talk about a name that you like, in the Mag 7. I know you like Mag 7 in general, right?
Yeah.
Meta, though, they're going to report this stock is up 100% year to date. Yeah. It's hard to believe that just about 2 years ago, Wall Street completely gave up on it. They said it's done, it will never work. They're too focused on the metaverse and all that kind of stuff. Yep. Then we had what I call the maturation of Zuckerberg. He seemed to get his act together. He appeased Wall Street while he's still working on his pet projects. Yeah. But you see more room to the upside.
Yeah, I do. Look, Meta's had a robust year. Gangbuster year. They had their CapEx hit a couple quarters ago. So a lot of companies, there's concern there about are they spending too much. They've got that out of the way. So I think the future's bright. Also, Mark Zuckerberg finally became cool all of a sudden. He grew his hair out. He's got his chain going. So I like it, but I want to be realistic. Again, this is different setup than Google. Google going into yesterday's earnings, the stock hadn't done well year to date. Right. So we want to be realistic. I think there's upside, but I don't think we're going to see the massive upside like we will.
Is this then a buy and dip? We see like these dips have been bought and you might have been able to make some money there. Would you wait for a pullback if you're not in the stock already?
If you're trading this stock, I think you wait. If you're an owner, you keep it, you hold it, and you let it rise.
Just ride it out.
It's not going to be a big upside from here.
All right, let's talk about the Russell, because you like the Russell too. In fact, you say that you're stubbornly bullish on it. Right. I guess stubbornly bullish means it ain't broken out yet, right? But it's been trading sideways, and it'll have 2 or 3 good sessions, maybe a good week, and then get smacked again. Yeah. What does it need to break out to really propel this move?
Yeah, this has been a tough environment for small caps. Interest rate environment's been bad, obviously, for their debt. So you've seen it struggle. If you look at the 3-year chart, Charles, that is a beautiful chart. We see a little cup and handle rotation. I think it's been consolidating here. I think we get the breakout. Again, policy matters. I don't want to say it's all riding on the elections, but if President Trump wins and he puts his regulatory and tax environment in place, massive upside. I think you could see 40 to 50%. I may need to bet you a beer on this. I think we could see 40% upside for small caps from here. Soft landing scenario and a Trump win.
All right, so I'll take you on that bet, even though I'm with you. I'm rooting for the same thing. So let's talk about the Trump trade, Harris trade. Yeah. Trump side, technology, defense, pharma, and crypto. I was just a little bit confused on the pharma part of this.
Yeah, so this is more FDA regulatory approval. You get an environment where I think you get RFK that wants to make America healthy, but I think we're going to see a streamline. He even talked about this, streamline approval for these drugs that can really help Americans. So I think it's a big deal.
And I think if Musk wants to get rid of $2 trillion in waste, a lot of it has to be bureaucracy tied into all these unnecessary regulations. Harris, infrastructure, renewables, healthcare, and cannabis. Renewables is intriguing because we thought this would work under Biden, and they have been an unmitigated disaster. But to your point, we would throw a lot of money into this with a Harris presidency.
I will. It's the overall market, right? Harris wants to raise corporate tax rate from 21 to 28%. Massive, huge, largest tax increase really in American history.
Let me get to your new ETF. I think I read a 24% yield. How does that work?
That's right, Charles. We're doing an options overlay. So you just mentioned this earlier. So we own the Mag 7 in our portfolio, but we also own internationals. We have a 30% exposure to internationals. I like India. I like Argentina. we talked about the Russell. So the Russell's been consolidating. We've been selling options against the Russell. So we've been selling a call spread. So we're able to get about 0.5% per week on our call spread. You annualize that out. That's a 24% per yield without selling your stock. So we still have the underlying, and you can generate some income with a broad market exposure.
And the symbol, that's GIAX.
That's right. That's right.
Great stuff. Congratulations.
Thank you, Charles.
Good seeing you in person.